Hey everyone, in this video I wanted to share with you some great news for Tesla stock and Nio stock investors. Now this will be a brief video, so let's get right into it. The big news is that Tesla and China's top automakers pledged to maintain fair competition and avoid abnormal pricing in the world's biggest EV market, signaling a possible end to the price war. Executives from 16 companies took part in the signing, including Tesla, Nio, BYD, Xpeng, and others. So, if you're not aware, Tesla and others were in a price war where they've been cutting prices, and this is typically what happens when one competitor cuts prices, others follow, right? If you've got two stores in the same street and you see your rival cuts their prices, you cut your prices to match what they did, right? Or you even cut even lower because you're not happy that your competitor is cutting prices to try and take your customers. So you retaliate. You retaliate by cutting your prices. So that's fueled this competitive war that's not been good for any of the EV makers, right? It's that when you enter a competition, when you start competition or when you heat up the competition, it's not good for anyone in the industry. It's good for customers. It's good for customers, right? Because when businesses are competing and lowering prices, customers come and see lower and lower prices. It's good news for them, not for businesses because profits are falling. In fact, I'll show you. What I have here is a chart of Tesla's and Nio's gross profit margin, and you could see starting around the middle of 2022, you could see gross profit margins start to decline from a peak of around 29% for Tesla down to 19%, and I wouldn't be surprised if in the next update this moves even lower still. And Nio from a peak of around 18% down to just 1.52% in its most recent quarterly update. So this competition has been devastating for profit margins of EV car makers and sellers, right? So I'm not surprised to see them come to the table and reach an agreement and say, "Hey, let's not continue this because we see what's happening, right? It's just hurting us, and that's not where we want to go at in terms of businesses. Let's come together. Let's not compete against each other. Let's make the customers pay more, and let's fatten our pockets, right?" And so this is what essentially what this deal does. However, it's important to note that competition doesn't only exist in pricing. Competition doesn't only exist in pricing. So while these automakers agree to keep prices at, you know, non-abnormal pricing, in other words, for let's stop offering discounts, there's other areas they can compete. For instance, Tesla can say, or Nio can say, fine, we won't cut prices, but you know what? We'll increase advertising. We'll spend more money on advertising than you're going to spend, and that's going to allow us to take more market share. Or we're going to make exclusive deals with suppliers and pay them more so that they can be exclusive to us, and you're going to suffer, and that's going to give us more market share, right? So there's several areas where businesses can compete with each other, pricing being just one of them. Pricing being just one of them. So while this is a step in the right direction, it signals to the market, it brings everybody to the table and says, "Hey, let's ease things down." What needs to happen is for all of the EV companies to themselves regulate the competitive pressure, right? I mean, I'll compare it to one of the least competitive markets that, or I shouldn't say least, but look at Pepsi and Coca-Cola, right? When is the last time you got an email from Pepsi or Coca-Cola offering you a discount on any of their products? They just don't do that, right? They like to keep their competitive pressure where it's at, the competitive intensity where it's at. They've reached an equilibrium after decades of competing with each other and kicking out rivals. They've said, you know what, let's keep it where it's at. Let's not keep going discounting and hurting us, right? Let's keep things where it's at. We like the profits that we're making. Let's keep it where it's at, right? That's where automakers, if they can get to that point, that's when it will be good for automakers and the shareholders, right? This is a step in the right direction, but more needs to be done to ease the competitive forces in this industry, which is the competitive forces in the industry is one of the main reasons why I'm not invested in any of the EV car makers. It's one of the main reasons why I don't like any of the companies in the industry is because competition is so fierce. It's not just on pricing. There's advertising, there's the creation of new models, there's the battle for talent, there is the security of inventory, the securing the exclusive deals with raw materials, all of that. There's just so much competitive pressure that I don't want to participate in as an investor. But that said, this is great news for Tesla and Nio stock investors, a big move in the right direction. Hopefully more to come after this. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.